The narrative surrounding XRP is beginning to shift from speculative anticipation to the cold, hard reality of global infrastructure deployment. While the retail market remains fixated on daily price candles and minor fluctuations, the institutional plumbing of the financial world is quietly being rewired across Southeast Asia. We are witnessing a strategic expansion that targets three of the most critical remittance corridors on the planet: Indonesia, the Philippines, and Vietnam. These aren't just names on a map. They represent high-volume, high-friction financial environments where the traditional banking system has struggled for decades. Ripple's recent maneuvers in these regions suggest that the utility-driven price floor for XRP is no longer a theoretical concept, but a structural necessity that is currently being built in real time. A significant catalyst for this renewed bullish outlook is the resurfacing of official documentation from SBI Remit, a powerhouse in the Japanese financial sector. The confirmed live XRP-powered remittance infrastructure is a collaborative masterclass involving SBI Remit, SBI VC Trade, Ripple, and SBI Ripple Asia. This isn't a pilot program or a proof of concept that might launch in the distant future. This is active, live architecture designed to facilitate international money transfers with the speed and cost efficiency that only the XRP ledger can provide. By connecting these three massive markets, Ripple is positioning XRP as the primary bridge asset for a region that is rapidly digitizing its economy and seeking alternatives to the slow, expensive correspondent banking model. Indonesia, in particular, stands out as a focal point for this technological transition. The country's Financial Services Authority, known as the OJK, is currently in the process of developing a comprehensive regulatory framework for real-world asset tokenization. This regulatory clarity is expected to arrive as early as the third quarter of 2026, creating a perfect storm for Ripple's existing infrastructure. When a sovereign nation begins to codify how assets are tokenized and moved on a blockchain, the first-mover advantage belongs to those who already have the rails laid down. Ripple's long-standing presence in the region means they aren't just knocking on the door. They are already in the room, helping to define the future of Indonesian finance. Despite these massive fundamental wins, a glance at the charts reveals a striking disconnect between the news and the price action. XRP has been lingering in a consolidation range between $1.10 and $1.25, seemingly indifferent to the massive infrastructure updates. This lag is a common phenomenon in the digital asset space, where fundamental utility often takes months or even years to be reflected in market valuation. However, for the patient observer, this consolidation represents a period of accumulation. Our analysts suggest that if the current narrative catalysts materialize into actual on-chain demand, we could see a steady grind toward the $1.62 level by the end of the year, representing a significant 40% move from current levels. From a technical perspective, the markers for a reversal are starting to appear, though they require a cautious eye. The Relative Strength Index, or RSI, has been hovering near the 30 mark, which is historically deep in oversold territory. In previous cycles, reaching these levels has often preceded a sharp bounce as sellers become exhausted and buyers step in to capitalize on the discount. However, it's important to note that oversold doesn't mean immediate moon. We are currently seeing the price trade below both the volume-weighted average price and the 20-day simple moving average. Until XRP can reclaim these key averages and hold them as support, the near-term bias remains defensive, with resistance levels at 130 and 150 acting as the primary hurdles. Looking ahead to the final quarter of the year, the Ripple Swell 2026 event in New York City is shaping up to be a pivotal moment for the ecosystem. This year's event has added a layer of mainstream visibility that we haven't seen in previous iterations, with Hollywood figures like Matt Damon joining the conversation. Damon isn't just there for star power, he is representing the organization Water.org, which is actively leveraging Ripple payments and the RLUSD stablecoin. This partnership highlights the humanitarian and real-world impact of the technology, showing how fast, low-cost money movement can literally change lives in Asia, Africa, and Latin America. This shift in narrative from crypto speculation to global humanitarian utility could be the spark that reignites investor interest. The integration of RLUSD, Ripple's stablecoin, alongside XRP is a critical piece of the puzzle that many are overlooking. By using RLUSD to facilitate the on-off ramps of liquidity while utilizing XRP as the underlying bridge asset, Ripple is creating a dual-threat system. This setup reduces the volatility risk for institutions while maintaining the high-speed settlement advantages of the XRP ledger. As Matt Damon and other leaders discuss the mobilization of billions of dollars through these systems at Swell, the market may finally begin to price in the plumbing value of XRP. We are moving toward a world where the success of the token is tied directly to the volume of money moving through these global corridors. While XRP provides the steady institutional foundation for the future of finance, the market is also seeing a surge in interest for early-stage infrastructure projects like Liquid Chain. This Layer 3 project is attempting to solve one of the biggest headaches in the industry: liquidity fragmentation. By fusing the liquidity of Bitcoin, Ethereum, and Solana into a single execution environment, Liquid Chain allows developers to deploy once and access all three major ecosystems. For traders and investors looking for that asymmetric upside that XRP once provided in its early days, these types of technical differentiators are becoming high-priority targets for capital rotation as the broader market consolidates. The unified liquidity layer proposed by Liquid Chain represents a genuine shift in how cross-chain execution is handled. Currently, bridging assets between different blockchains is often a friction-heavy process that costs users time and money. By providing verifiable settlement in a single-step process, this architecture could significantly lower the barrier to entry for decentralized finance. As the Liquid Chain presale continues to gain traction, having already raised over $850,000, it serves as a reminder that the blockchain space is evolving on multiple fronts simultaneously, from institutional remittance giants like Ripple to innovative liquidity hubs like Liquid Chain. Ultimately, the path for XRP is becoming clearer with every regional expansion and every regulatory milestone. The Southeast Asia play isn't just a minor update. It is a direct capture of some of the world's most active financial markets. While the technical indicators suggest we may have a few more weeks of selling the rip until key resistance levels are cleared, the long-term structural repricing story remains intact. We are watching the transition from the speculative asset to a global utility standard. For those of us on the XRP Economic Radar, the question isn't whether the price will catch up to the story, but rather how much infrastructure will be in place when it finally does. Stay tuned, as the final months of 2026 are likely to be the most consequential in Ripple's history.